Are home prices stabilizing at this point in time?
They averaged it out in the GTA anywhere from 4.9%.
Today than they were 3-4 years ago. They're paying less on pricing, but borrowing at a slightly higher rate versus paying more in pricing 3-4 years ago and having a cheaper interest rate.
With the rate coming down and the prices coming down, they've won on both ends if someone's waited a couple of years.
The shoeboxes that the builders are now trying to sell, they're 600 to 700 for a 2-bedroom. 1,500 square feet is a delight.
It's like living in a nice sized bungalow.
Hello folks, and welcome back to the Mortgage Den. My name is Nick Silva, principal broker here at Northwood Mortgage, and today with me, Steve Wise, real estate agent guru at Remax Realtron. Welcome, Steve.
Hi, how you doing?
Not too bad. Steve, we are now mid-spring 2026. How is the GTA real estate market doing in general?
In general, the spring has picked up a little bit. We've had a bit more sales. Prices year over year have decreased a little bit, but our sales have gone better. Some of the listings, there's a little bit less, and they started coming on about now. It's getting stronger.
Now, what are buyers to expect from what you've seen recently?
Well, they're a little apprehensive still, but some people are getting off the fence figuring the rates did come down, so it's a good time to buy, and they're just being careful, and they're shopping a bit more before they go ahead.
Are home prices stabilizing at this point in time?
But year over year, I mean, they've got all sorts of numbers, and they should do it block by block of different locations, but they averaged it out in the GTA anywhere from 4.9% year over year to even as high as 6.6.
So that's the drop in the market.
Yeah, averaged out.
But as you just mentioned, we're seeing some upturn in sales.
That's correct.
So, I mean, can I draw the conclusion that we're seeing more sales because we're seeing sort of lower prices?
That's correct. It's some of the people are saying, hey, now we've got some affordable housing. It's more affordable than it was. The rates came down. So those two things are kind of married together always. So you've got much better interest rates than you did a year and a half ago. And your prices, depending on areas from a year and a half ago, could have gone down as much as 20% outside of Toronto.
There's a lot of different geopolitical things happening around the world today. And mortgage rates seem to have sort of plateaued out for the most part at this point in time. They're not dropping lower. You know, the consumer who was expecting, the 2 and sub-2 mortgage rates are never going to see that again, or it's going to be a long time before we see something crazy like that. So are they coming to terms with that fact that these are the rates they're going to see?
I agree with you because they've now gotten used to it. When it was going up and up and up, I mean, it just stopped thing and some government things that were done to slow things down. But with the interest rates kind of, as you say, kind of stabilized at a certain rate, people are living with it because depending, and that's your specialty, but I've seen people getting 3-year rates at 3.60, 3.65, and they seem comfortable. At 4.5%, 5% for a 3 or 6, it was hard for them. But they're looking at that. The prices adjusted. They're saying, I should get in here. Even if the prices of houses adjust a little bit more, if you're in for 2, 3, 5 years, you're fine, in my opinion.
What you're saying is mortgage rates is about dictating what some of the buyers are looking to do. As you said, 4.5, they're a little bit more hesitant. They're probably getting a better price today than they were 3-4 years ago. They're paying less on pricing, but borrowing at a slightly higher rate versus paying more in pricing 3-4 years ago and having a cheaper interest rate.
Yeah, I mean, with the rate coming down and the prices coming down, they've won on both ends if someone's waited a couple of years. So I would say if I was giving advice, if someone was ready, it's a good time to be getting into a home right now. Condo market is, of course, a much better deal for someone if they're an end user. So, and the government's got incentives for new builds and for first-time buyers for land transfer tax.
We'll talk about 2 different types of buyers. The buyer who's buying for not the first time, second time or more, and then the first-time home buyer. What should the person who has a home right now, either looking to upsize or to downsize, what should they be doing? I mean, what should they be doing in today's market?
If someone's downsizing, it's a little easier for them because they're going to have some more money. Now, a more expensive house, if there's been adjustments, if you just go by percentages, they've lost a little bit, but they're downsizing and their life will be a little easier. They might not need a mortgage or just a small mortgage. Someone upsizing, they're benefiting because the more expensive house is going to be a little bit cheaper and the interest rate's cheaper. So they're all going to, that's why it's gotten a little busier because everyone's going to benefit a bit. But if you're already had a house before, you've already built some equity. You just have to make sure you sit down, and if you are using a real estate agent and a mortgage broker, and have them go over all the costs on selling again and on buying again, and know where you stand so you don't get hurt.
Should I sell first before I buy? I mean, that's the big question today.
That's an easy answer right now in this market. Yeah. Sell first.
Right.
Know how much money you have to work with, and then you don't have the pressure. Even if you've sold for a little less, it's more stable, less stressful. And then if you're buying, it's still a bit more of a buyer's market. You'll be okay.
Steve, what's the biggest trend from a buying point of view are you seeing right now in the market?
You're getting first-time buyers because they have incentives for land transfer and other things. So, and the prices on the entry level, if it's a condo, they've got a lot to choose from. So they can get in now if they have some, a bit of a down payment. So that market, is soft from a selling point of view, but if you're a buyer, you're benefiting. From the other trends, it seems middle of Toronto seems to have gotten busier because in that higher price range, some people, who are doing well, they're not as affected in some ways. And a house that they maybe could have bought for $3 million might be 2.5, or 2.4. So they're saying, I'm going to get in because that's a large savings for them.
Again, here's the big question. With all the stuff that we're talking about, is it a good time to buy now, or should people still be waiting?
I would say if you're ready, you won't get hurt buying now, because even if, as I said earlier, if the market went down, adjusted a little bit more, and you're in long term, I wouldn't be concerned. But the values are good, the rates are settled. If you wait too long and we have a shortage of listings and people get going, you may pay 5 or 10% more within a year or two.
Are we in a balanced market? Are we shifting back to balanced market, or are we still in a buyer's market?
It's heading towards a balanced market. You've got not as much inventory came on, but there's still a lot to choose from. The balanced market is if a seller could get out okay, and the buyers, it's still a buyer's market. So it's not balanced as yet.
So you think it's still a buyer's market at this point in time?
Yes.
Let's talk about this ugly word, the condo market.
Okay.
Let's talk about the resale condos. How are those doing?
There's a lot out there for sale, but people are buying them. But it's got to be, and the prices are at this time very reasonable, because some of the resale condos out there, older ones, I don't believe you could build them for what you're buying them for per square foot. Example, in North York, something I have for sale, something like that was about $950. It's now $620, $625. Right. You're talking 1,500 square feet, something in original condition in certain buildings, not a bad building at all, can be about $620. Renovated, I saw something go for $640 for 1,500 square feet. That's great value at this time. And
that's good square footage, because
yes.
The shoeboxes, we'll come to it in a second, but the shoeboxes that the builders are now trying to sell, they're 600 to 700 for a 2-bedroom. 1,500 square feet is a delight as far as I'm concerned.
It's like living in a nice sized bungalow. So the transition, if you were buying down, you're kind of buying into a one level bungalow, really. But you've got security. If you're a snowbird or anything like that, you turn the key and it's left alone. Maintenances are a little higher, but if you figure out how much it costs for running a house, it's not going to be that much difference, because you're not going to have repairs either. But there's some, the larger ones I think are good value. The little ones, there's just so many, and so many came on because we had a lot, was all investors. Some of the buildings you look at and we get stats, the amount that's rented is 70% or 80% of the building is leased out. Part of that market is gone because some of the government, stopped investment. So that's hurt that market extremely.
Let's talk about the government. I mean, what you're talking about was, first and foremost, in Ontario, the foreign buyers tax. And then federally came in and we have the foreign buyers ban for most metropolitan cities in Canada. Has that hurt the real estate market in your opinion?
The condo market extremely, because a lot of people invested for investment and also even for people coming from overseas or students to live. And that's really hurt it. It's badly.
Now, in the GTA, we also have, well, I won't say the GTA, I'd say Toronto, we have the vacancy tax. So for investors who come and buy and are holding, but they're not doing anything with those properties, is that a deterrent for these people to buy those type of properties?
Well, it's an issue because even in some of the offers we have now, there's a clause saying, have you signed your vacancy tax or whatever? And there was something I was selling, and the tax, let alone the property tax, if you were purchasing it on one condo, was $16,000 premium for buying a condo that had been vacant or didn't have someone that it was rented or actually living there.
And that, unfortunately, that vacancy tax is attached to the property, not necessarily to the owner.
That's right.
So when the government reassesses the property and determine that maybe no one was living there, you could be, unfortunately, left with a tax bill that the previous owner should be responsible for.
Right. So that's why lawyers and people are asking for a certificate that someone lived there. Everyone fills out a form if you have invested in a condo and you're renting it out, or if it's vacant, and it's an unfortunate thing.
All right, so let's talk about the condo market from new builds, right? These are condos that have, been sold to, the population by builders. They're coming to the market right now. As you just pointed out, they're not closing for the most part.
Yeah, it's been very difficult because someone maybe who's bought in 20, 21, 22, closing now, they have paid $1,300 a square foot, $1,000 a square, depending where they purchased, and the value of them really might be only $800 right now. So, small example, something I looked at, purchaser is at $659 for a small 486, 490 square footer, paying $1,300 or more square foot. The value right now on our market is somewhere around $480. Now, this is something without parking. So now they've got to close and they're already in the hole, 15, 20, 25%. So if they have a home, they have to borrow against their home or walk away. But you can, in some cases, some builders, you may be able to go up to them and try and negotiate and say, look, I have a problem here. And there's the odd larger builder that sometimes will work with people. If you can show them why, it makes sense for them to at least get it sold or do something. But that's become a problem where you're already underwater. Even in Mississauga, there was someone paid $864 on paper.
Right.
It's now worth approximately $570 based on our real estate market. And I was checking out and there was 15, 20 sales and showed that property now is $570, $575. And now they've got to try and close at $864. They put $200 down, which is now really gone.
Yep. And
they're still short. So that has become a problem with the pre-construction, but there are people closing, if they're capable.
That's a big drop. I mean, a
Yes.
$300,000 drop in price, when you're about to close. Number one, I don't think a lot of people are expecting, a $300,000 drop, and so their financing has become a challenge.
Yes.
And, you're buying, the minute you open and close that door, you're down $300,000. I mean, that's a big kick to the investment or your wallet at this time. And the only way to sort of recoup that is to hope that the market sort of goes back up.
That's correct. I mean, in some cases, if it was an end user and they possibly had put 30% down, we're in that position, or they'll move in because they have to live somewhere anyway. And it would probably be the cost or less of renting, but they own. And if they live there 3 to 5 or 6 years, maybe it'll come back and they've paid it down. So that's where you're seeing closings, where someone is going to live there, or someone who has the means and they don't want to, unfortunately, maybe be sued or anything or have any bad credit, they may just go ahead and do that and take the loss from a tax point as well.
The stats that RIA or TREB, these are the real estate boards, have put out is that there's about 4,300 units that have not closed. These are units from builders. Those are your stats, your industry stats. There's a buyer coming in from Montreal. A major company wants to invest, and they're going to buy out maybe 1,000 of these units. Still leaves about 3,200 of these units sitting vacant at this point in time. And you and I were discussing off camera that there's more of these units coming to the market with these ridiculous differential between what they paid for per square foot and what it's worth today on a resale. Builders are not going to be building. I mean, what are you hearing from builders at this point in time? Are they building any new condos at this point?
There's some that may go ahead if they're in a prime location where people just buy. I mean, no matter how you look at it, if you have, and I've used this scenario before, you say you have 10 units for sale, 15 buyers for 10. That was our market before, or 20. Yeah. Now you may have 10 units for sale, but you have 5 buyers. So there's still buyers. Now, when you talk about these guys buying the blocks, sometimes it could be a pension fund or a gigantic company. For them, it looks like a good investment, and they can hold it. And their attitude is they're going to rent these buildings. They'll buy a whole building. And it sounds like a lot, but they have hundreds and millions of dollars in their funds. Yeah. They can buy that, and they'll wait it out. And I saw that was done about 12 years ago in Florida. There was a couple of groups from Toronto and Boston that spent $500 million down there buying things, and their attitude was a 10 to 12 year turnaround, and it worked. So this could help a bit, but they'll be buying at discounted prices, because I dealt with one of these builders, and he had bought a building in Florida just at that time. It was $28 million in financing it. He bought it for $12 million, and it's probably worth 18 or 20. So they did okay. So that could help a little bit to get rid of some of the overage right now. But it's mostly the little units, because they weren't building enough big ones anyway. So that market of larger ones is kind of somewhat holding its own.
I mean, to me, it seems like there's a lot of these purchasers, and I don't know if they're investors or were they first-time home buyers who've got themselves caught up in this, I'll call it a condo mess, buying from builders over the last 3 or 4 years, where the values are down significantly. These people represented, I guess, the first-time home buyers getting into the market. Now that we're seeing a significant of them not close, walk away from their down payment, I mean, these people are not going to be able to come back to the market again for 5 to 10 years. I mean, it's a matter now of either they're going to have to be gifted more money or they're going to have to start saving up. What do you think of that? Yeah,
it's a hard part of it, because the average person working, they save hopefully 20% down, 25% if they did. And then the property they're buying goes down 20%. Because even if you have 20% down, you've got a few percent just to close. Yep. Land transfer tax. I mean, unfortunately in Toronto, you've got double land transfer tax, but if you're a first-time buyer, you're getting a little bit of incentive and so forth. New build stuff, they're starting to offer some incentives for new builds. I think Ontario was trying to do that, that'll help a bit. It'll help the new builders. Yeah. But it's a tough go, but a lot of people are sometimes getting help from family. Someone may finance their home to help children or whoever, or have to finance their home to close the investment they wanted to buy. And, sometimes they'll have to use secondary financing, which private or B lending, and that's your business. And that's made that business a bit busier, but there's probably not even enough of that right now, because the person's just so far, unfortunately, underwater, as they say.
How has all of this now affected the rental market? I mean, again, you've got all these condos, and the ones that are not closing, that probably going into, as you pointed out, a rental pool. They're being rented out at this point in time.
The rental market, the prices are somewhat holding their own. I'll give you an example of just something I was involved in. During COVID, a lot of the rental went down 20, 25%. So people could, hang on. and I've got one that's renting. They're now renewing the rent downtown in a nice condo. So they're now actually since 5 years, they're paying what they were 5 years ago, because they, instead of losing a tenant and having an empty place, they gave them relief, but then they couldn't really catch up. So they've just been adjusting it, and they're back after 5 years to the rent that it was, which was expensive. But yes, it does affect it. But some of the vacancies, depending on what you're buying, with housing and stuff, like detached homes, it's not like a lot around. But condos, it helped with rental because our vacancies were tough here for years, like the apartments. But I've seen also some of the builders have gotten clever with their building rental buildings. In North York, there's the odd place where they may they'll do the commercial main level and possible rental, and then condos up top, or a full rental building, which around the Yonge and Steeles area that's starting to happen, which is, I think, a good idea. They're seeing the potential. Plus, they're also building where the subway is supposed to come, and you still have transit.
Right.
So that's a good idea. That'll help the rental market.
So, Steve, a lot of our conversation has been centered around the GTA or the Toronto area. Let's start pushing out, going east, into Durham region, a little bit north into York region, and go west into Peel and Halton, and maybe even further, Cambridge, or the Waterloo area, stuff like that. How is real estate responding in those areas?
It's always been, you started the GTA and then it takes off, and then the other places went crazy because you could buy a nice house. Some of the homes, even when you get towards Niagara, London, their houses were 400 or 500. They went up to 800, 900. They doubled and then more. And then when this all started with the interest rates, they dropped 20% at least or more. But what I've saw, let's say in Durham, we talk Pickering, Ajax, Oshawa, Curtis, and all those areas. If you price things right, they're selling quite well right now. But a lot of it, and again, example, a house in Oshawa on a small court, a nice little area, house sold for $965 about 4 years ago. It's currently for sale at $729. Two houses on that street sold for $705 and $710. They sold quickly, but at that price. So it was a big adjustment. So the opportunity is good if you were purchasing in Ajax, Pickering, and Oshawa, and all these areas. They came back a bit to more affordable. To buy a nice detached house for $700 or $800, $900 is good. If you work out that way or you don't mind commuting, there's good value. And if they're priced, they're selling quickly. Cambridge, it's kind of the same idea. Cambridge is just over an hour or so drive, and their market is an example of some houses. Say a house that was about $1,050,000, $1,001,000. Some of those houses would be adjusting. Newer ones built in 2018 and up are probably about $960,000, $970,000. So there's an adjustment there, but they came back a little bit too. So, and those are nice areas. Milton is very popular, but it's actually pricey. Oakville is coming back pretty well. Even their high end has always been strong there. Oakville's just income-wise is very high in Canada. And but all those areas, if you're price rate, they're selling very well. They've got lots of stock, but they're selling well.
Now, has some or a lot of that also been, I guess, directed by the fact that employers are now expecting their employees back in the office.
Well, that
on a almost a 4 to 5 day work week.
Yeah, so some of that has affected people because when they could work remotely, they pushed out further and further, and that pushed up prices. So people started first just going 40 minutes out, 1 hour out, an hour and a half. Cambridge is very popular. Waterloo, Guelph is only an hour, and those areas are nice towns, nice cities for people and to bring up a family. But now that they're having to come back, I could just see it even in the traffic. It's just gone up at least 40% or 50%. And I'm seeing why Ontario wants to build some new highways, because they used to call them bedroom areas, even Barrie was called that, are full of development and nice it was really affordable before, and then they started getting expensive, and it made it very difficult. But those areas are doing okay, and I think if they don't jump up, they'll hold their own. But yes, the outside is affordable housing now.
Well, let me ask you one last question before we go. Foreign buyers, do we bring them back? Do we need them to stimulate the real estate market at this point in time?
I absolutely. Why shouldn't they have a right to buy? First of all, that's just an opinion, but it's part of our real estate market, part of the country itself. They're the ones who purchased, and they're, for immigration. We need immigration anyway, and these people they know that Canada is a safe place to be, one of the most sought after countries in the world. So why not have them come in? And they have now relaxed some of the red tape for servicing. There's in Ontario anyway, so that they can get through and get the houses built and get the subdivisions. So that's just happened in the last year, that they've been pushing to get through the red tape so we can get our developments, because it takes so long. And the other problem is for the builders, and I've talked to them, it's so expensive for them to service lots. And by the time they buy the land and get things going in 5 or 6 or 8 years, it goes on to the consumer.
Right.
So they're going to open that up. That's really going to help Ontario, especially.
Well, Steve, thank you for your opinion on that. And thank you very much for being on the show today. It's
Pleasure.
Nick De Silva at Northwood Mortgage, the Mortgage Den, and see you at the next episode. Thanks, Steve.
Thank you very much.